Hey, good morning, students. This is Jaya Vishakhan. For this lecturing video session, I am going to take the topic types of cost. In the previous lecturing video session, I have taught you the definitions of cost and the concept of analysis of cost and the cost function. So, in this lecturing video session, I am going to explain in detail about the types of cost. So, there are even 12 different types of cost under the cost analysis. Let's see one by one in detail. So first let's see the opportunity cost or the alternative cost. So the alternative cost or the opportunity cost also be called as transfer cost. So it is the next best cost. So here let's see what it says. It arises because of the scarcity and alternate use of sources. The opportunity cost is the income which the people have to make choices between the alternative because it's a scarcity. Right? So suppose let me just cite an example here. Suppose a boy has got ₹10. With this, he can get 5 cups of ice creams. Right? So each ice cream costs ₹2. With that ₹10, he can get 10 chocolates. The alternative can get 10 chocolates. Each costs ₹1. The boy realizes that he can either have 5 ice creams or 10 chocolates. His choice is with him, right? So if he wants both, he has to give up the consumption. That means sacrifice of one for the other. By sacrificing one ice cream, he can have 2 chocolates. So let me just cite another one example. Suppose a producer has ₹10,000. He has a choice, is product A and product B. He can choose either A or B within the available amount. So because it's a scarcity, the alternate resource has to be used. Right? So this is opportunity cost. So let's see the implicit cost. So this is not direct cost. It is not recorded in the company's account book. Right? So let's see what it says. Implicit cost differ from other cost. This is also called imputed cost. So implicit cost may be defined as the earnings of owners resource employed in their best alternative uses. For an example, an entrepreneur does not utilize a servicer in his own business and works as a manager in some firm on salary basis. If he starts own business, he forgoes his salary as manager. The loss of salary is an implicit cost of the owner. So let me just cite one more example. Suppose particular land where the firm is being situated or located, that could be owned by the owner, right? So here the rent is not being calculated, right? And the interest on the own capital, suppose he has even put the capital amount of 10 lakhs, for an example 10 lakhs, so the interest amount is not being calculated. So this comes under the implicit cost. So it is implicit because the income foregone by the entrepreneur is not charged. That means it is not recorded in the company's account book. Right? Let's see the explicit cost. So this is nothing but the normal business expenses. So all the costs is being recorded in the account book. Let's see here. Costs involved cash payments which are made by the employer to the owners of the resources as the services are purchased by him, like raw materials, etc. Right. So this is also called payout cost or accounting cost. The other names of explicit cost are payout cost or accounting cost. Example, here the payments of wages, salaries, interest, rent, purchase of raw materials, insurance fee, etc. Everything is being recorded in the company's account book. So this is a direct cost. Let's see the private cost. What does that mean? For a firm, both explicit and the implicit costs are private costs. Okay. Let's see the social cost. Social cost implies the cost which a society bears on account of production of a commodity. Example, mills and factory located in the city causes air pollution by emitting smoke. Leather factory causes water pollution. Cars and buses cause both air and noise pollution. Right? Money spent towards medical expenses connected with treatment or diseases arising out of the pollution is social cost. Hope you have all remember I have cited some examples when I took the chapter in first unit, that is the external externalities, sorry, that is the positive externalities and the negative externalities, right? So where I have cited the example for the social cost incurred, right? So that is the cost here, right? Let's see the fixed cost. So fixed costs are those which are fixed in production. So example, the machinery, building, land, everything comes under fixed costs. These costs don't vary with every change in output. Whether the factory produces 10 number of output or 100 number of output, this cost will not change. That is fixed cost. Let's see the next cost, which is variable cost. The variable cost are those which vary in the output. So these costs increases with an increase and decrease with the decrease output. Suppose the firm produces 50 output, 50 units, then cost would be slightly decreases. If the firm produces 100 or 150 units, then the cost increases. So these are because the cost incurred in the raw materials, labor, everything that comes under the variable cost. So variable costs include running expenses, fuel, repairs, etc. Right. Let's see next cost, incremental cost. The incremental cost refers to the additional cost incurred due to the change in the level or nature of business activity. So the incremental costs are also known as differential cost. Incremental cost measures the difference between old and new. Okay. Let's see the total cost. The total cost is defined as the total actual cost incurred by an entrepreneur to produce a given output of the given quantity of output. So total costs are composed of two major elements. Those are total fixed cost and total variable cost. So total cost is the sum of fixed cost and the variable cost. Let's see average cost. Average cost per unit is the total cost divided by the number of units produced by the firm. So the average cost is also obtained by adding average fixed cost and average variable cost. Let's see the next cost, which is historical cost. So historical cost is nothing but the cost paid in accordance to acquire an asset. Right. Next cost is marginal cost. So marginal cost is nothing but the extra cost or the additional cost. The marginal cost is a change in the total cost resulting from the change in the total output. It means the addition made to the total cost caused by producing one more unit of output. Okay. So let's see the next cost, which is sunk cost. So it is a cost that has already been incurred and cannot be recovered. So the producer would have been spent some money in his firm, but that cannot be recovered in the future. So that's what it says. The past cost not relevant in future, which cannot be recovered. So the sunk cost also been called as retrospective cost. So the sunk cost been explained here. Let's see an example. So for you to make you understand the fixed cost, variable cost, the total cost and the marginal cost by illustrating a table. So you'd be in a position to understand what has been said in the previous, right? So I have explained, I mean, almost 10 to 12 types of costs, right? So this is the fixed cost, this is the variable cost, this is the total cost and marginal cost. See, fixed cost is always fixed. So if you produce 1 unit or 5 unit or 100 units, so look at here, the total cost is fixed. The variable cost varies based on the number of output. So look at here, the one for 1 unit it consumes 100. So for 5 it is 600, right? Similarly, the total cost also vary because it's a sum of fixed cost and variable cost. Okay. So marginal cost is nothing but the uh, cost. Suppose for the unit of production is 1, it incurred total cost is 200, and for the unit there is no unit being produced, that is 100. So difference in these two, 200 minus 100, there is a difference in amount, that is called the marginal cost. The formula has been given here. Hope you have all understood the types of cost being explained here, right? Thank you.